Hey guys, welcome back. In today's video, we are talking about AMC increasing, the worldwide margin calls, short stopping, and many more in this video. First, we're taking a look at this. Yahoo and all the stock market publications are pathetic. No AMC stock did not increase due to ticket sales over the weekend. Everyone knows Citadel Securities and Virtue Financial set the stock price by directing order flow on exchange versus off exchange, influencing supply and demand on exchange at their discretion. So if you want to know what he's talking about, he's referencing to this particular article. So we saw AMC go up today. Now it was at one point up 5%. We closed the day off at 2.73, but you can see what this article was trying to say. AMC rose 5.68 as investors reacted positively to a surge in ticket sales over the weekend, significantly outperforming the broader market 0.11% gain. So this is what they're trying to say in terms of why AMC is going up. Now the reason for this, why it's interesting, why we're calling these guys out, is because of the fact that that is of course not the case. Previously we talked about this article as well, talking about how AMC climbed 6.28% after positive sentiment from hints of an interest cut by the New York Fed. And so this is the recent articles that we are looking at right recently, where they've changed their outlook. They are releasing positive articles now about AMC, but they're entirely wrong on what it's about. Firstly, we knew that an interest rate cut is good for AMC. We talked about how that decreases the interest payment. However, we've seen plenty of times where there has been an interest cut and yet nothing happened to AMC. So why is it that this one was significant? And the answer was that the interest rate cut is not significant. What is significant is the fact that these guys, these short sellers, are running out of cash and they can't suppress AMC. And so these articles are trying to hide it away by saying that it's because of the fact there is an interest rate cut. The same as this as well, what we're looking at for the AMC reacting positively to a surge in ticket sales, because we've seen plenty of times where AMC has shown they've broken records. We've seen plenty of times where AMC has released earnings talking about records concessions, record sales, record attendance, yet we don't even see the AMC price go up, we actually see it go down. So how is it that one good weekend suddenly allows AMC to go up 5.68%? And so you just see how pathetic these articles are. And more importantly, is that this article talking about the weekend, so what happened on Saturday and Sunday, and they're talking about how it affects the price on a Tuesday, is extremely ridiculous, because on Monday what you guys can see was over 14 million shares traded on AMC, and the stock is completely flat after a record-breaking weekend. And so what the price should have affected the most was Monday, the day literally after where the reaction would have came in after the weekend. But we saw that AMC actually moved to 0%. And only on the Tuesday, so a week already after everyone has already seen it, everyone know what's happening, we went up, so 2.73%, or at that time of this articles, obviously 5.68. And so by now you should realize that these articles, whilst they're trying to give a positive outlook on AMC, at the end of the day is still entirely wrong. You know, I think what they're trying to do is that they're trying to make it look like they are speaking good about AMC, but the ones who actually do their research, that the ones who do their due diligence, will know exactly what's going on. They are just trying to hide the weakness that is shown by the short sellers right now as they fail to suppress AMC. And then you can see they try and recover this, which is saying AMC rose 3.18% after announcing the AMC Popcorn Pass, a new subscription service for moviegoers, boosting excitement ahead of the holiday season. And so you can see they realized their mistake and changed the excuse. Now, this is something that has happened today. Do I think that this is a particular news that will allow AMC to go up 3.18%? No. Is there a good news? Of course it is. If you guys want to see what this news is, you can see AMC is continue to increasing its popcorn revenue line. So now in store offers, we have all of these new flavors, and essentially what they do is that give them 50% off on popcorns for people who buy this particular membership. So it is good news because it allows and creates incentive for people to buy popcorns. It increases the revenue. However, we've seen plenty of news like this before in the past, and it goes again. When we do see these news in the past, we never see AMC go up. So why is it that this case that we're seeing these things happening? It's because once again, it goes back to our point of saying that is because these articles are trying to hide the weakness shown by the short sellers. And you can even see here, 600 shares borrowed already against a 220-cent stock that just saw another record-breaking weekend heading into the holiday weekend. So what these articles then fail to mention is, despite the fact that we are seeing good news, we're seeing the price going up, the creation of synthetics and the borrowing of these shares have not gone down. So under normal circumstances, when you do see that, AMC is doing well, or when you see a particular stock is doing well, you tend to see the shorts leave, hence why the share price is going up. However, despite what they're saying about how people are viewing AMC as a bullish opportunity, the bears, the shorts still exist and are in fact increasing. And that's what the articles fail to mention, because they realize that this time, as the shorts are increasing, they aren't having any visible effects. And so really our point here is just showcasing how much they're trying to hide away the weakness from the short sellers. And it's very apparent why they're doing this. This is something we'll talk about later on in this video, but so far you can already see the pathetic excuses, the pathetic reasoning that these guys are trying to show. Another thing, improving the monthly average of exchange. So another thing that these articles fail to mention, but something that is still very important, is the fact that off exchange is obviously still extremely high at 75%. Now, another reason why I say that this is weakness shown by the short sellers, because the fact we are seeing the 75%, the fact we're still seeing extremely high off exchange, we're seeing AMC go up. And that itself is a very good sign, because we've known that previously, they pair off exchange with plenty of other different methods to obviously bring AMC down, but now they're struggling to do so. And that itself is what we want to see. The fact that they're struggling to bring AMC down, despite having a high off exchange, should really highlight what is actually happening. Everything that we've done for the past 5 years, all of this pressure we applied onto the short sellers, are of course working, and this is the result that we are getting. And when you pair that up with everything else that's going on in the market, you understand why we say that the margin calls are going to happen. You can even see here, despite everything that we've said, algos are still here, right? So we know that AMC going up, that is just natural behavior, that is natural movement, and that is just real price discovery, because AMC is extremely undervalued. And so AMC's price should go up, but it doesn't take away from the fact we are still seeing the manipulation. Off exchange, FTDs, all of this. You can even see this with the high help frequency algorithms, where you can see, even with 200,000 shares trading in 2 minutes, the bars don't move. And so this is what they're trying to do to prevent AMC from going up. Now, it's no surprise that this is happening. And the important thing about this is that this was actually talking about the 24th. And the reason why I say this is important is because, once again, these articles who are lying about everything, who are wrong about everything, like we've shown here, that's why we've known that these articles are working with the short sellers, because the fact that they release things just like this. You can also see spoofing uses massive AMC sell walls, huge share volume offered below the price, done to create an illusion of overwhelming selling pressure. AMC is having more frequent spoofing. The intent is not for testing market liquidity, but price manipulation, which is illegal. Now, once again, I highly recommend you guys obviously take a look at this. We've talked about spoofing plenty of times in the past before. We've shown examples of spoofing on AMC. We've shown examples of what spoofing can do. If you want to pause the video, or if you want to take a look at this tweet, feel free to do so. But this is something that is still regularly happening, and in fact it's something that's happening daily on AMC. Now, the usual suspects are the people that you would expect the most. It's the short sellers of AMC. We've seen companies like Bush, we've seen companies like Citadel and Virtue, we've seen companies like Goldman Sachs, which, despite the fact that they've put all of their positions into longs of AMC, they're still spoofing AMC, which makes us believe that on the open, in the public, to the naked eye, they are long AMC, but hidden below all of that, all these hidden shares that we can't see, all of these synthetics that they've created, it still exists, and Goldman Sachs has a big portion of the synthetic shorts of AMC, hence why they're still spoofing AMC, and they long the AMC because they're afraid of what is going to happen. And on top of all of this, a big fundamental factor is, of course, the movies that are going to be released and how it's going to benefit AMC. You can see Zootopia 2 is now tracking to make 500 million plus on its opening weekend at the global box office. A big 150 to 170 million 5-day domestic opening, but America will not be its #1 market. So official projections for Zootopia in China increased to 37 million to 42 million opening day, a 200 million plus opening weekend. So you can see how big of a movie this is going to be. Now, this is on the back of Wicked, which we talked about how well it's done. Not to mention, we also have Avatar coming out as well, something that I'm extremely excited about. And this is what we've said. This Q4 is not yet ending, and it's already shown how many bangers it's going to release. And you pair that up along with some of the still good but not as big as these movies, that it's gonna do extremely well. This is why we expect Q4 numbers to do extremely big. It's why we expect AMC to also benefit from this, and that's why we've said the fundamentals of AMC is doing extremely well right now. Now, here is the shocking thing, and it's the thing I want to talk about. So we talked about how the short sellers are showing weaknesses, hence why they're using these articles to hide it. But where do these weaknesses stem from? Where are we seeing indications? Well, first, take a look at this. So US Office of Financial Research shocked to learn off-exchange repo market exceeds 5 trillion. And so that's over 100% more than expected. And a repo equals basically short-term loans backed by bonds that can amplify systemic shocks and liquidity issues, margin calls, and domino bankruptcies worldwide. So if you want to see, are we seeing any caveats? Are we seeing any indicators of margin calls, of worldwide bankruptcy, worldwide market crash? This is what we are looking at. A 5 trillion shadow market, where they're reporting that banks and big funds quietly lend each other $5 trillion in short-term loans using bonds as collaterals. And until now, almost nobody could see these deals because they happen privately, not on any exchange. And if anything were to go wrong, think 2008. Banks can suddenly stop lending and markets can freeze before anyone even knows what happened. So this is essentially a ticking time bomb that will blow up before anyone knows it. And no one, even the banks themselves who are lending these money, won't know when it will happen. The reason for this is because that it takes just one singular chain to break, one small bank to not be able to pay back these loans, to not be able to have the liquidity, and then this whole chain of loaning this 5 trillion will all go down in flame. And so that's why we've said, why we've pay attention to bonds, to collaterals. One of the biggest things we talk about on this channel is because of things like this. So when we say that the whole market is dropping, when we say that the bond is in a risky time, when we talk about how the collaterals are vaporizing, the illiquidity issues becoming bigger and bigger, it's because of things like this. Now, this isn't something that we've mentioned in the past, the 5 trillion reverse repo loans, but we've already talked about the illiquidity issue. And this is just adding oil to the flame that already exists. And then you can see here the reverse repo, 2.3 billion. Nothing to really be paying attention to in terms of the fact that we are seeing volatility. We are seeing it go up and down. There's nothing to worry about. Like we've said, we already know that there's an illiquidity issue. We already know that banks need to borrow money. And so for there to be an injection of money into the reverse repo is extremely normal. But the very fact that it's staying this low, the very fact we can see it getting closer and closer to zero should be something that's good for us, because of the fact we know that the moment there is no liquidity, or at least no easy liquidity in this market, you're going to start seeing these institutions struggles. You're going to start to see these institutions covering and screaming for help. And now another big thing, the big bubble that everyone's talking about recently is, of course, the AI bubble. And you can see here, America's second richest man needs a government bailout. Oracle and OpenAI can't pay for the NVIDIA orders they've placed. And so this is what we're looking at right now. If you want a sign of the AI bubble, here's what we're looking at. But it doesn't just stop there, because we can see is that recently NVIDIA has had extreme volatility. And now we can see how even NVIDIA going down 7% is a drop of 300 billion. So let's talk about why this is important in two different aspects. The first thing is just a showing of the potential warnings of the AI boom, the AI bubble burst, and that it can cause multiple markets to crash. But not only that, the second way to look at it is understanding that, again, touching up on collateral, something that we've talked about, is that these guys who've, used Nvidia as collaterals, the moment we see 300 billion market cap gone, we're also looking at 300 billion worth of collaterals vanishing as well. And so that creates stress on these short sellers because they previously relied on this money to short AMC. And so is why we pay close attention to this. And now, like I've said, it doesn't stop there, because we're seeing the CEO of Nvidia desperately defending against a single short report right after saying his earnings saved the entire economy. And so these are all the indications for why we are in such a volatile and maybe potentially extremely fragile market, because everything that's going on right now seems to be all standing on one leg, and this one leg is seemingly looking like it's about to collapse, because you can see here, just in, Nvidia is set to lose 180 billion as Meta considers Google chips. So another blow for Nvidia. And right now, and it is true, Nvidia is a stock that's carrying the market right now. So if we are seeing them lose market cap, if we're seeing them lose value, you can see how whole market will fall along. The only thing potentially is that potentially Google can then become the next leg, but that still remains the problem of how we're still in that bubble. Because when you look at this, hedge funds are dumping US tech stocks. And so this is what we've said. We're looking at how more and more people are realizing that some stocks are extremely overvalued and that they're worried about what's happening if we continue investing into them. And more so, they're worried about what will happen when everyone starts to realize that it's overvalued and then everyone starts selling, and how big of a collapse that's going to create. As always, none of this is financial advice, so do take out the game. So make sure you do your own due diligence and research, and I'll catch you guys next time.